we were watching these lows, and I was watching the relationship between these lows between the NASDAQ's lows and the Dow Jones futures contract lows. And there was eventually a divergence between those three averages. And then they all eventually went lower. So all of them agreed on that lower low here, but the dollar index did not. Even though we have a lower low formed here on all three major averages, the NQ, the YM, and the ES, they all agreed on that lower low. There was still SMT divergence there because we're looking at the relationship to the dollar index. The dollar index is going to give you risk on, risk off. If the dollar is going to go up, that means it's risk off. That means forex, foreign currencies, and index futures are going to have more freedom to drop and have a hard time rallying higher. If the dollar index is moving lower, that's risk on. That means that forex, foreign currencies, and index futures are going to have a very easy freedom to rally higher, and it's going to be very hard for your sell short positions to be profitable. It just won't pan out well for you. The relationship between confirmed higher highs, not higher high, higher low market structure. I'm talking about very specific key lows that are forming. If there's going to be a change in sentiment, usually the dollar index will start showing it to you. If you see the lows forming, we were already worrying about these lows forming down here early. We felt that they were suspect because I did not see follow through on dollar index. And the dollar index failed to make a higher high, and this is where you need to write in your notes. The dollar failed to make a higher high as we made this lower low at 10:12 a.m. So that lower low on the ES and the lower low in NASDAQ and the lower low on Dow futures was not met with a higher high in dollar. That is an SMT divergence. I call that index SMT divergence, dollar index SMT divergence rather. A symmetrical market, and this is for your notes as well, a symmetrical market is where if we have lower low like this, we're not talking about trend, we're talking about very specific relative highs and lows. We have a low and then a lower low. If that lower low is seen in NASDAQ and lower low in the Dow and a higher high in the dollar index, that's a symmetrical market. That's in a perfect world, that's exactly what you want to see. If at any time you see one of those crack in the correlation that I just gave you, it's telling you there's a sentiment shift unfolding. So you have to be able to measure things real time. If you're going to be a day trader and you want to have precision and you want to be trading with an institutional mindset, these are the tools and concepts that they're employing to do it. There's no indicators here. All we're doing is referring to another asset, another instrument, and its price delivery. The reason why this occurs, for some of you that are thinking, well, why does this even work? Because there is a shift in all of these algorithms. The dollar index runs on an algorithm. The ES runs on an algorithm. The Dow runs on an algorithm. NASDAQ runs on an algorithm. They're all running on an individual, same, but their own individual algorithm. When they're manipulated, that crack is like the signal for, all right, it's time. And here's the wonderful thing. It's never going to stop working. So stop worrying about it, okay? The reason why it's never going to stop working is because the market has to signify it's time for that smart money group to get to work.